Well, after the gut-wrenching fall in the month of July and early August, is it time to put money to work, or we are going through this rather difficult and uneasy patch of economy where rather than participating, one should be avoiding? Is it time to protect capital, or is it time to really get greedy and put money to work? Valuations, global setup, underlying print of the economy, and good news on monsoon. Couple of complicated headlines, but let's connect all those headlines into one with none other than Hiren Ved of Alchemy Capital. Hiren, so nice to have you back on ET now.
Well,
thank you for joining
Nikunj.
us. I guess you're the only bull who's decided to talk on this bearish market, so I welcome that.
Well, we are all so used to these bull and bear market cycles. So, I mean, you have to take this in your stride.
Is it just a bull market fall, or this is the beginning of a bear market?
Well, I think it's this is a interruption in the bull market is what I believe. I think it looks like a bear market in earnings. It was not a bear market in stock prices, but now it looks as if that we are in a bear market because I think finally people are giving up that earnings have not come through, and also we've seen so much of disruption, policy level disruption, economic disruption, and that I think has kind of caused this earning recession, right? And now these few events that we've had, which I think were unnecessarily, post budget, where they put a surcharge on FPIs. Increasing the tax rates when globally tax rates are going down. It doesn't leave a very good taste in the economic participants, right? They believe that, they get a feeling that, why am I working so hard if,
everything has to be taxed.
Yeah, everything has to, and I don't think anybody is complaining about paying taxes and that money going for the benefit of the entire bottom of the society. Nobody denies that, and everybody is happily willing to do it. But these rates, I think you want animal spirits to come, you need to cut rates, and that is how you will revive investments, right? When you have these rates, you have a counterproductive cycle where people tend to take their capital offshore, and that's not what you want. India is a capital scarce economy, and you want capital to flow in. So I think putting a surcharge on ultra rich or the super rich as they call it, and then putting a tax on FPI, you basically gave out a wrong message saying that we don't care about your capital, and I don't think that was really something that people expected.
Is it the tax which is spooking the market? Is it the economy which is spooking the market? Is it the slowdown which is spooking the market?
Well, actually, it's the slowdown, and then on top of that, it was these tax issues which really, spooked people. And I think the tremors of the IL&FS crisis are still being felt. The knock-on effect of IL&FS and then DHFL, and then, we thought that only the corporate deleveraging cycle is playing out, but the crisis in the fixed income markets and the, because of IL&FS and DHFL, now the promoter deleveraging cycle is playing out, right? Which in a way is good, because I think somewhere there is now discipline that will come in, where I think serious promoters are realizing that both leverage at the corporate level and leverage at the personal level needs to be managed within limits. Otherwise, you can lose your company.
So what is the good news right now? Everybody is talking about only bad news. What is the good news?
I think the good news is that, that I think that a large part of the disruption, regulatory changes, hopefully are behind us, and a base has been built. Simultaneously, we are seeing deleveraging happening, right? And I think that I see a silver lining, because today now there are some good assets which are available at distressed valuations. So for example, I'm not aware whether the Yes Bank QIP has gone through or not.
It has gone through. That's what they've informed
Okay.
exchanges.
So if if that has gone through, what it tells you is that at a price, there is institutional money or there is some money that is stepping in, right? If the Z deal has happened, you know that there is some investor that is stepping in. So I think we have now come to a situation where there are certain good assets where capital is willing to come in and take that risk. So that's the first indication, right?
That things have become cheap.
That things have become cheap and somebody is willing to risk money because he believes that at this price, his probability of making money if things go right is substantial. Otherwise, why would people
That's a
come
great point.
come in and put money, right? So I think that that is one silver lining that I see, that there are buyers for good quality assets and there are some smart money or institutional money, whatever you call it, which is willing to step in. At some point in the market carnage, this is what happens. And we are beginning to see some elements of that begin to happen, right? Secondly, I think that because in every sector that I see, there is massive consolidation that is happening. Like real estate, for example, right? I was talking to somebody in Delhi and they said that, other than DLF, there is no large developer which is surviving. Now, what does that mean? Yes, the real estate market is down, but you've taken out suppliers. You've taken out so much of supply from the market, and whoever is standing today has a great opportunity to take away market share over the next 2-3 years.
The last man standing will gain disproportionate amount of
So
market
I think
share.
what's going to happen is that the opportunity is twofold. One, if you can find good quality distressed assets and put money there where your risk reward is favorable. And second, you play the last man standing in every sector, because that guy has a once in a lifetime opportunity to take market share away from people who are distressed. I mean, we've heard about this, private banks taking away market share from public sector banks. We've looked at large organized players in consumer sector or retail sector taking away market share from everybody else. And this is playing out in every sector. If you think through, it is playing out in every sector. I mean, today, who thought that CCD will not be there, right? So now you have
Only
Tata
Starbucks
Starbucks,
left,
who has a great opportunity to clean up the market, right? So if you look at it, that is where I think this market is giving you an opportunity that amidst all this gloom and doom, either you find good quality assets available at distressed prices and you back some of the leaders who have a great chance to gain over the next couple of years because of the disruption and so many players getting out of this industry.
So these are some structural changes which are happening in the economy, and periodically that's how the weak players get flushed out, the
Yes.
strong players they survive and become larger, right? We've
Yes.
seen that with Bajaj Finance, a classic case.
Yeah.
Where do you think the big picture or the earnings trajectory is intact, and more than actual business decline, it is a sentiment and liquidity in technicals which have taken the prices down. Those are great businesses to buy, where the big picture is intact, the earnings and the moat is intact, but it's the sentiment and technicals which are punishing those stocks.
Yeah, I think, Nikunj, in every cycle, this has repeated every couple of years where, weak companies or, companies where there are issues of leverage or governance, they go through this very deep correction cycle. And when that happens, along with that, there is a collateral damage that happens, because even good companies tend to get smashed, especially in the small and mid cap space, right? I think by and large, my feeling is that, we all have been complaining about how bipolar the market is, that very few companies have driven the index, the Sensex and the Nifty. But the fact of the matter is that that is reflective of the economic reality as well. Very few companies have been able to protect earnings and grow earnings, right? I mean, HDFC Bank is still growing earnings at 21%. Bajaj Finance is still growing earnings at 35-40%, right? So those who are able to grow earnings and where there is scale and governance, that is where the money has gone. And for the rest of the market, I think you need to see a real serious upturn in the economy, and that can only come if the wheels of credit start to move again. See, it is very good to say ki, there are few companies who don't need the money to expand because they are free cash flow generating. But that cannot be true of the whole economy. A consumer needs money to consume. Somebody needs money to buy trucks. And businesses need working capital. They need capital to expand. So if you look at it, the best years of earnings growth and markets have been when both capital markets have done well and credit growth has been fantastic.
That's a dream era. That's not coming back.
Re-leveraging, not deleveraging, but re-leveraging. Today, we had a situation where we had deleveraging on the debt side, and equity markets last 12-18 months has been difficult for people to raise equity capital.
IPOs have dried up.
IPOs have dried up, right? All of that has happened. But there, at least in equities, I do see a silver lining. As I said, there are now slowly and steadily buyers coming for good quality distressed assets. And usually the cycle starts from there. It is a few instances of resolution. So I think if we see 2, 3, 4 things getting resolved in the markets now, some confidence will come back and ability of people to take a little more risk will come back. And then obviously I think we have now reached a stage where this so-called slowdown, which seemed very temporary, gathered a snowball effect. And when it gathers a snowball effect, you can't just leave it and say that it will heal on itself. You need very strong intervention. And I think after the budget, whether it's industry associations, whether it is investors, whether it is, people, I think there is enough messaging which has gone out to the government to say, hey, we need you. We now need oxygen, because if we don't get this oxygen, then we are going to die.
If things don't improve, let's say by festival season, everybody is monitoring auto sales, FMCG sales, they are calling their cousin brothers and cousin aunts to figure out what is happening to their rural economy. What could be the downside?
See, unfortunately, I believe that while we may all wish that, demand will bounce back in this festive season, things could improve at the margin, but I think in my assessment, it is going to take a little bit longer for real demand to revive. First, we have to stop the degrowth. We have to flatline, and then we can think about growth. So my sense is that it is going to take 6-9 months before real growth can pick up.
You've used a word called fallen angels in the past.
Yeah.
When the same situation happened in 2013-14, you bought into United Spirits, Glenmark, Bata. What is there on your shopping list where you think that, look, it could be a 10% downside, there could be 15% volatility, but the earnings growth will ensure that in 2 years, in 3 years, 40-50% return could happen?
I think
that's a reasonable assumption to make, right?
I see opportunities in 3 or 4 buckets, right? One is that even the best of the best have corrected.
Give me an example.
Bajaj Finance has corrected, HDFC Bank has corrected, even Axis Bank has corrected from the top reasonably. So, which is typically happens that in the cycle, the best fall the last, right? You will get some opportunity there at a certain price, because you will get to add to what I call the leaders, which have also corrected. You got to figure out which ones. Second, I think there are sectors which have gone through a very long consolidation phase over the last 8-10 years. Real estate is one of them, right? I think you now have regulation in that sector. You now have far more high quality institutional organized capital which is backing that sector, with the Blackstones of the world, and with REITs coming in. I think that there will be a few players who have remained solvent and who have been able to deleverage. I think that, and with the kind of consolidation that we are seeing in the sector, I'm not saying that things will improve immediately tomorrow, but stock prices are at 10-year lows, near about 8 to 10 years lows. And I've seen that if a sector has gone through a massive consolidation for such a long period of time, then there are opportunities that you will get, right? And then I think consumption will continue to be, according to me, the bulwark of this. I know a lot of people don't agree. They believe that valuations in consumption are high. But my sense is that I don't see a significant uptick in capital investment cycle as yet. Yes, there is some spending which will happen on by the government, but unless we see large scale long term money, which they are trying through the NIIF and attracting foreign direct investments, and unless we unclog some of the inconsistencies in the infrastructure sector, you tell me which infra company, everybody who tried investing in the infra sector have lost market cap, right? So I think that consumption is still something that you can bet in this country. I think what has happened is that rural consumption has taken a big knock because there has been a deflation in agricultural prices. My sense is that if agri product prices start to move up, I mean obviously monsoons have recovered now, but if agri prices start to recover, then some of the rural demand will come back, right? And we've seen some bright spots in the consumption sector in this quarter.
Paints
for
has
example,
done well.
paints has done well. Few of the FMCG guys have done well. I think by and large the liquor guys have done reasonably well, right? I think that is where the opportunity. And I think one area where they genuinely did something in this budget was in low cost housing, affordable housing, where they've given a big tax break. So I do believe that housing finance companies, the good ones, will see, who are focusing on that low affordable housing segment, could see an opportunity. So I think that's where we see opportunities in the marketplace, and I think you will get your chances to buy over the next 3 to 6 months. I'm hoping that some of the things you have broken on your channel does come through, and that will really help in improving the sentiment of people. So right now we were getting to the point of a lot of gloom and doom, but I think there's always a silver lining in the gloom and doom.
The mid-cap investing in India has not been a very happy experience.
Yeah.
Last 5-7 years, if you just bought one mediocre stock, returns have been negative. If you bought a bad company, then God save your returns, they've been negative. You have a situation where there's a lot of liquidity in the world. Liquidity will chase growth, or fewer pockets of visible growth. Liquidity will come back eventually to India because of the global negative interest rates environment. What kind of market positioning could we be staring at? The same 10, 15, 20 stocks keep on going higher, or risk will start moving away from them?
See, I think we are in a unique situation. I agree that if there is liquidity that comes in, then it typically tends to go where there have been returns, right? And last 2-3 years, returns in mid caps have not been that great.
It's 5 years. Why 2-3 years?
Now 5 years, right? Because the base is low. So I think if FIs typically don't tend to go down the cap curve. They typically tend to buy the top 30-40 companies where there is liquidity, scale, size, visibility. So I think this time, if genuinely we do see the economy turning around, then I think my sense is that the foreigners will continue to buy the large caps, except for India dedicated funds, because there the managers know how to pick mid caps, right? And as far as domestic money is concerned, some of it may come back into small and mid caps. But I think this time around, we are not going to see a secular bull run in small mid caps like we saw between 2014 and 2017. It's going to be very selective. We actually did a study, Nikunj, that if you take a 10-year period between 2008 to 2018, and we studied 1,350 companies,
investable universe,
which were called small and mid caps at that time, and how many of them have been able to transition to becoming large caps in 1 decade. So 10 years is not a small period of time. Only 80 companies could make it, 5% of the universe.
And your definition for large cap is 5 million, 10 million?
Well, the definition is that the top 100, the 100th company in the market cap, right? So if you take the BSE 500, you take the 100th company, right? which is 3 billion odd, about 21 to 25,000 crores.
So only 80 companies have
Only
migrated
80 companies
higher.
had migrated from small mid cap to large cap.
And now how many are left, I don't know.
Yeah, so I'm saying that it's, to make money in small and mid caps, you really need a great economic cycle which will lift some of these companies into becoming larger companies. And the success rate is very, very low, right? So either you have to be so skillful that you are able to pick amongst those 80, or you are just doing such a broad diversified call that you take a call on 100 companies and the entire asset class does well, right? So I think that it is, I think one big lesson is that yes, mid and small caps is very exciting, but the success rate is very, very low, and you have to be both skillful and lucky to get hold of a couple of them, who become multi-baggers, true multi-baggers. Because
Stick to large cap for next couple of months.
I think stick to large caps and larger mid caps, right? As I said, in every sector, there are 1 or 2 or 3 players who are standing. They have a brilliant opportunity to take market share away from other people. So those are the guys who will continue to grow.
We are meeting at a time when news is bad. Let's hope prices are better. Good news and good prices, they don't come together. So maybe we are going through that patch. We're calling the show as to how should one really deal with sell-off. So if you have to give our viewers and investors a quick way as to what is the best way to deal with the sell-off 2019, what should be the best way? Why don't you look at the camera and tell us?
Well, I think, I tell people that, there are 4 options, right? One is that you do nothing, you sit tight. Second is that this is a great time to look very hard at your portfolio and restructure it, because today everything is available, everything has gone down, so you have a great opportunity to take a hard look and switch your investments. Third, which I would not recommend, is you quit at this stage after having taken so much pain. And fourth is, if you have the conviction and a long-term view, then this is the time actually to add money. So I would say, depending on your risk reward and your risk appetite, you should choose one of the 4 options and decide how to deal with the sell-off.
Fantastic. Great piece of advice. Appreciate your time. Thank you for joining us. Well,
Thanks,
for the
Nikunj.
moment, that's it on this Market Makers. Over the next couple of days, we are committed to really not only decode the sell-off 2019, but how should one really approach, protect capital, conserve capital, or grow capital in this kind of an environment.